Hello, hello. Happy Thursday. It is almost the end of the week, which is probably good news. Friday is always a good day. We are coming to you again live for our Instagram Live mini masterclass, and today's topic is the co-mingle jingle. So we're talking everything that has to do with co-mingling your personal funds with your business funds, and why you shouldn't do it, what happens when you do it, how you keep from doing it. And so we will continue forward with this. So welcome. So the co-mingle jingle is just what I'm calling this because it feels like most businesses, when they start, I'm going to go with like 99% of them, they just treat their business account as if it's like their personal account, or some business, some personal. Seems simple enough. I'm a small business. I don't really have a lot of money. I can't pay myself on payroll is what everyone says. So I'll just use my business debit card to go to the grocery store, to buy shoes and school clothes for the kids, to pay my mortgage, to pay my car payments, all of that. That's actually commingling. So no matter how small your business is, if you're a sole proprietor that just has one business checking account, you're barely making any money, you don't have a lot of clients yet or customers yet, if you're a retail store that's, just doing the bare minimum every day to cover the bills, it doesn't matter. It's still commingling. So what this means is that you're using your business accounts as if they were personal. And that's really not supposed to happen. So as soon as you start a business, no matter what, LLC, sole proprietor, especially corporation of any kind, especially nonprofit, you don't want to commingle anymore. And I know people always say this, they always say the same thing. Well, I don't have the money to pay me, right? So that's how I can get my money, is by using my business debit card. But here's the thing, you can pay you, because you are paying you by going and using your debit card. That's paying you. That is spending the business's money for your personal stuff. So the way to stop doing this, and it's a great thing to do even when you're small and you're a sole proprietor before you have to, because once you are a S Corp or a C Corp, you cannot commingle. That is a huge no-no, and I'm going to go into a little bit about why that is. It's also, we talk about it briefly on the Instagram Live with Deanne Chase. If you refer back to that video, we go over this subject matter as well. But if you're using your personal debit card, your business debit card for anything personal, it's the same thing as just transferring that money from your business checking account to your personal checking account, and then using a personal card to facilitate those transactions, those personal transactions. And I see this all the time, and I hear it all the time from people who are like, I can't afford to pay myself. But you really are. You really are paying yourself already by using your business debit card for personal transactions. The number one easiest way to stop commingling is to just transfer the money that you were going to spend from your business account for whatever the reason is, from the business to your personal. Then that is recorded as an owner's draw, because you're drawing money out of your business. Because believe it or not, even though it feels like, oh, this is my money, once you start a business, it is not your money. It's the business's money now. So you're actually taking money from the business. It's not an expense. It's not something you can write off. It is a draw. You're drawing on your profits any and every time you spend on for your personal expenses on your business account. So you're going to transfer the money. Let's just say you're going to the grocery store, and on average you spend $200 at the grocery store. Transfer $200 from the business account to your personal account, and then use your personal debit card to buy your groceries. Now, in your business recording or bookkeeping or records, you are going to see a $200 owner's draw. Perfectly legit, perfectly fine to do, very normal transaction. You're not then trying to call this some sort of write-off or some sort of business expense. It's very clear that it was you taking money from your business and over to your personal. A lot of times what happens, and why commingling, the number one reason why commingling is not good to do, is that especially if you're not keeping up on your bookkeeping, it is really hard to remember and know exactly why and what you bought 3 months ago, 2 months ago, a month ago. And if you don't have an accounting professional managing your books for you, who's then asking you for the receipt, asking you for what the transaction is for, making sure they understand and categorize it correctly, you might just call it office supplies. Walmart is a great example of this. Walmart could be so many things. Walmart could be office supplies. Walmart could be dog food. Walmart could be baby supplies. Walmart could be furniture for your house. Walmart could be repairs and maintenance for things you had to do around the office. That is why it is so incredibly important to keep your receipts and actually look at every single receipt before you categorize or as you're categorizing to make sure you categorize it 100% correct. That means if part of what you bought was personal and part of what you bought was a legitimate business expense, you need to categorize it as such by what they call splitting the transaction and making sure that you don't call that entire receipt business related or office supplies, especially if it isn't even office supplies at all. And I see this a lot, where people just get into a habit of, oh, Walmart is office supplies. Well, but really, is it? And so that's where people think, oh, it's just too confusing to transfer back and forth. Precisely the reason why you want to just take draws. You want to transfer, let's just say $500. Then you go to Walmart, then you go to the grocery store, then you go to the post office, then you go to wherever, and you're using your personal debit card to facilitate those transactions. Me time in your business books, it's just one $500 transfer because that's the amount of money you were going to spend anyway by taking your business debit card and doing all those things. So that's the number one easiest way to prevent commingling. Even when you're the smallest of businesses, you want to get in that habit of getting your personal money or just transferring money so that you can use your personal card and account to make personal transactions. Yes, you can take draws. Yes, it's normal. Yes, it's okay. But you don't want to just have every transaction that's personal floating through your business account. Now, when you move into the corporate space where you're, excuse me, an S Corp or a C Corp or, for God forbid, a nonprofit, it's extremely not allowed. You do not want to do this. It is called what they call piercing the corporate veil. It's very against the rules. If you're ever audited as a corporation and you have commingled your personal and business finances, they will assess that you are treating your business as a sole proprietorship, and all of the corporate tax benefits that you would have received or maybe you have received over the years will be reassessed, and you will be then taxed as a sole proprietor, which means you're paying 15% self-employment tax on all the money that you haven't priorly paid taxes on because you were treating your business as a sole proprietorship. It's so important that you, once you make those elections, do not do that at all. There's no wiggle room. There's no if, ands, or buts. You cannot commingle once you take those entities. You shouldn't ever. It's not even okay really for a sole proprietorship, but it's much more wildly accepted, and you can kind of get away with it by calling it draws, by calling it owner, equity transactions. You can do that, but you can't when you're a sole or a corporation. In that case, you need to be putting yourself on payroll. Now, I hear this a lot too. I can't afford payroll. The same exact money that you're paying your mortgage, your car payment, your groceries, your kids' schooling, everything with, is the same money that you would just give yourself in a different manner, which is payroll. So instead of spending $2,000 on your mortgage payment through your business account, you pay yourself $2,000 on payroll and then pay the mortgage out of the personal account. Yes, you're going to pay taxes. Yes, there's going to be employer taxes. You do not have to be in workman's comp if you are the owner. You're exempt anyway, so there's no additional cost there. However, that payroll tax is now going towards your total tax debt that you're racking up throughout the year with your profits. If you are overpaying in taxes because you didn't make any profits and you don't owe any taxes, you will get your refund. And you're paying into Social Security. You're paying into the systems that will help you retire and are going to be there for you when you retire. And a lot of people through COVID and the PPPs and the EIDLs that were following correct corporate bylaws and processes, those owners were able to get unemployment when their business was tanking because of the pandemic, because of not having any business, because of having to be closed down. The people who put themselves in line and did the things correctly got the help that it's set up, because now they're a different entity than their business. They are an employee of their business. Their business is not the one and same as them. And that puts you also in that position. And I guarantee you, going to get funding on a car loan, a mortgage, a credit card, all those things on your personal side, it's going to be so much easier with a W-2 showing what you make than as a self-employed, single, sole prop person. I can personally vouch for that. It took me 8 years of being self-employed and finally putting myself on payroll 2 years ago before I could actually qualify as a self-employed person for anything. It is so hard to qualify as a sole proprietor. They don't care. They want to see that your tax returns make all this money and that you're so profitable. And from a tax perspective, you want all the write-offs you can get, right? So you're not overpaying on your taxes. But on the flip side of that, if you're not showing you make incredible profits, which you then have to pay taxes on, it's very hard to get qualified for things. So remembering that too, it's actually a good way to set yourself up for purchasing and credits and mortgages and cars and everything else in the future, to do this when you elect for the S or C corporations. Nonprofits, absolutely zero tolerance on personal spending. There's all kinds of compliance and rules around how nonprofits can spend their money, who can spend their money, what they can purchase with the nonprofit's money. So once again, you're now a separate entity. You are not the nonprofit. You're a member, or you're an officer, or you're some sort of elected official, but you are not the nonprofit. You cannot use the nonprofit's money for anything that's out of compliance. So if you have to go to the store, you have to have a payroll account that's paying you for the nonprofit, and then use your personal card, period. Very, very no tolerance policies on nonprofit spending of personal money. So please do yourself a favor. Don't get mixed up in that whole world, because I've heard of people actually going to jail because they were using the nonprofit's money for personal expenditures. The very best way to avoid all of this: have a business account, have a personal account, transfer money from the business to the personal. Now, when you get into like the S and C Corp elections, you can also take what's called distributions. So you put yourself on payroll for what's considered a reasonable wage, and every single business's reasonable wage will be different. Okay, I can't even tell you just on this mini masterclass what your reasonable wage could be. But based on your reasonable wage, you put yourself on payroll for that. And if you have to do additional withdrawals, so let's say you put yourself on a payroll for $1,000 every 2 weeks. That's $2,000 a month. Not many of us can live on $2,000 a month. However, as an S Corp, you can then take what they call distributions, and you can just transfer money from your business account to your personal account for another $1,000, let's say. not running it through payroll, so it's not taxed, but you're still taking it as a distribution. You're not commingling your funds. And because it's a distribution, it's not taxed. So it doesn't actually cost you that money in payroll tax. Now, there's guidelines to this. There's things to know. And if you're looking at, switching your entities, or you already are, but you're not really following the rules and you want to get more compliant, reach out and let us know. We can definitely help you through that process. But that's one of the other benefits you have as an S Corp or corporation, that you can take those distributions that are not taxable, as well as your reasonable wage payroll. At the end of the year, you want to make sure that you go through your numbers, you understand that anything that you have spent in your business that could be personal or is personal has been categorized correctly. So one of the things in an audit is that the IRS is going to look at what did you claim as a business expense. And they're going to rip it apart, and then they're going to ask you for documentation about proving how this was a business expense. And travel and meals or travel and entertainment are one of the hugest red flags that a business can have. So if you have very high travel expenses or very high meal expenses, very high anything related to entertainment, you really want to dissect those categories, look at every single transaction, and make sure that you can prove definitively that they are somehow business related. Great way to do that is to take and write on the receipts. A QuickBooks conference meal with, whoever you were with. Prospecting meal with client so-and-so, they signed their contract on 6/2. Just really make sure that you're writing on these receipts that it was business related, how it was business related. If you're giving gifts, if you're doing anything that's kind of travel, if you're going to conferences and expos, I know you have the tickets. You could take a picture of the ticket next to the receipt. You can write on the receipt what the expo is for. You just need to make sure that you have the proof when you're audited that these were business related, and you are fine. If all you have is a receipt for a meal out and about, 9 times out of 10, they're going to say not allowed, because there's no proof whatsoever that this was a specific business expense. It now looks like it was a personal expense. It's now commingling. If there's enough of that going on in your file, they could say that you're piercing the corporate veil. They could then reassess your taxes. I mean, it's a big deal, especially if the dollar amounts are large. In 10 years, I've seen about 4 audits so far. 2 of them were random, so nothing was wrong with their books, meaning nothing triggered it, nothing looked odd, there wasn't like very obvious things. And 2 of them were specifically for travel and entertainment reasons. And that is the truth. There's 2 that were random and 2 that were specifically because of those charges. So I just encourage you to make sure that your details are as crisp and clear as possible. If you're using an accounting professional, they should be asking you, what is this for? How is this business related? Do you have the receipt? You can actually attach receipts to every transaction in your books if you're using QuickBooks Online. So there is no need to have to save them, put them in shoebox, keep them for 7 years. Everything's right there. And if you've written on them what the business event was, you just print it out and you hand it over. And guess what? They're like, oh, great. And they check it off and they move on. So as long as you're always doing everything you can to put yourself in the position to pass with flying colors as with an audit, you're fine. Audits don't have to be scary. They don't have to be stressful if you're following the rules. And one of the biggest rules you can follow, don't commingle your funds. So I'd love to take any questions if anyone's watching and would like to ask a question. If not, as always, please post your questions in the comments or DM us if you're don't really want your question public. We do go back in and answer them, or we will answer your DM if you send it to us. And we actually are going to do our next mini masterclass already again next week. We usually do them the second and fourth Thursday of the month, but because we had a couple reschedules, we're going to do them back to back. So our next one is Thursday next week. I don't have the date in front of me, and I can't think of it at this moment, but it's next week. And we're going to be talking with investment and retirement and all the strategies for your exit plan and setting yourself up for success after your business closes, or you retire, or you want to sell it, or you want to give it over to your kids to take over. So we'll be talking about all of that stuff. So that's it for us today. The co-mingle jingle, don't do it. And again, I know it seems silly to just transfer. I've seen people do just $20 at a time. That's great. That's fine. Transfer the 20, use your debit card at the drive-through. That's your personal account. You're great. You're golden. You have one draw, and then you didn't commingle your funds. So doesn't matter how small you are. Don't do it. Set yourself up for success and start that habit. And then as your business grows and grows and grows, and you become a different entity selection, such as an S Corp or C Corp, you've already had that habit, then you introduce payroll to it, and there's all kinds of other benefits for your business as well. But that's it for us today. Thank you all so much for joining us, and we will see you next Thursday. And don't forget, you can always watch the replay here if you wanted to take notes or if you missed anything. See ya. Bye.